Hi and welcome to Finextra at Sibos TV, and today we're talking to Jeremy Light of Accenture. How's it going? Very good. So, investments in payment transformation is growing, but before we sort of get into some nitty-gritty of the questions, could you give us sort of an explanation of exactly what a payment transformation is?
Well, a payments transformation is the implementation of a new core payment system and/or the restructuring of payment operations to make them more efficient and effective. And there are various reasons for doing this. In Europe, it's Sepa. In the Americas, it's international expansion. In Asia Pacific, it is quite often payments transformations done on the back of core banking transformations. In emerging markets, it's about building new infrastructure and nation building. And everywhere, it's due to compliance and for regulation and industry initiatives and so on. So they can be very big, these transformations.
So based on your experience, what do banks need to do to get the most out of these investments in payment transformations?
Well, there are three things. First of all, you've got to architect the solution properly. Payment solutions don't operate in isolation. They've got to work with core banking systems, with channels, with gateways to market infrastructures, and it's a fairly complex jigsaw which has to be got right. Secondly, you've got to engage with the business in order to get the right business outcome. And thirdly, you've got to have a team who are experienced, who've done it before, who've sort of built the jigsaw to make sure that they can design something that's going to work in harmony with the business, that they've designed it to produce a good business outcome, and that they're able to deliver it. And some of these programs are actually large and complex. And in our experience, if you don't get either the architecture right or the business engagement right, you can get chaos. And in particular, we're seeing that business engagement is lacking in quite a few payments transformations. Now, for example, if you ask someone who owns current accounts what their requirements are, they'll just shrug their shoulders in many instances. And this is one reason why we're seeing, in the UK, faster payments is overly underutilized. In Sepa, in Europe, you've got slow adoption of Sepa. And for example, in the US, if you make an online payment, quite often it results in a check being printed off the back end and put in the post. So business engagement is absolutely critical.
Getting ready for Sepa, the single euro payments area in Europe, is a big topic of conversation. But haven't banks been ready for Sepa for quite some time?
Well, they have, but they've been Sepa compliant, and not all of them necessarily been Sepa ready. So as the Sepa volumes grow, those that don't have the capacity will need to invest again. And certainly, the Sepa direct debits are pretty moribund, but Sepa credit transfers, they're doubling every 10 months. And already, as of July, 20% of credit transfers in the Eurozone were Sepa credit transfers. And for example, if you look at, say, the French public authorities, they say they expect to have fully migrated to Sepa credit transfers by the end of this year, and they account for 45% of all payments in France. So it's quite easy to see within 2 years that there's going to be full migration to Sepa credit transfers, even without a regulated end date. And from a bank's perspective, you have no control over the incoming SCTs. And if you don't have the capacity to handle them, you've either got to invest or to look at outsourcing, as we've just discussed.
Finally, I want to wrap this up with another huge topic at Sibos, which is mobile. So where is mobile going in the banking space?
Well, I like to think of it more as digital payments rather than just mobile, because we're certainly seeing that there's a convergence between mobile, the internet channel, and also the physical point of sale. And one of the key features of this convergence is the ability to pay from one account. Now, that account could be a PayPal account, or it could be one of these many mobile wallets that are starting to appear. But from a bank's perspective, they have the unique advantage of having the current account. And if they can get a capability where they can enable that current account to allow consumers to push payments regardless of the channel over those channels, we can see a lot of successful new innovations. And already, for example, we're seeing Ideal in the Netherlands. We're seeing the EBA recently announced over the summer the My Bank initiative. In the UK, you've got EY's Payo. And here in the US or in North America, you've got Secure Vault Payments. And that business model that they all have of one account pushing payments over multiple channels, whether they're mobile, NFC, or the internet, I think is a model that's going to prevail over the next couple of years.
Yeah, that is the key with mobile. Customers it shouldn't matter to them what the back end payments processing is, on their end.
Absolutely.
Excellent. Yeah. Thank you very much.
Thank you, Liz.
Thanks.